Here we go then. There's your quick little move. That bit of movement, that sudden change in pace and zip lower is the info that you need. That's the bit that says to you, yeah, this trade looks good. So what we're looking at then to start with is an hourly full session chart and a profile cash session. Now I don't expect everyone to know everything about profile technical analysis, but I'll give you enough on this. If you do want to know more, click the link, join the webinar, and I'll explain more there. What we've got here is a double top on the hourly chart. Why would you want to sell it? Where do you want to sell it? And where do you want to take this to? That's ultimately the ingredients to any good trade. Two highs at the same point. They don't have to be exactly the same. Yeah, this is an hourly chart. So that could be one reason to sell. But technically, a double top does not come to play until you've broken these lows. But back to this. So with this trade, you've got the double top. Now, that's not the place to sell. The place that you want to be selling is once you start to come back through the cash session open, through the initial balance. At this point, now you are confirmed on a move down. But there is actually an earlier point to potentially sell. What we've got here is an overnight drift higher, a break of a previous high. So as we start to then roll back down through these areas, you can be into this trade earlier, then looking for the break of the initial balance, the 86.66 area, to then initiate the next leg of this move down. On the next chart, I'll show you why that should play out. And ultimately, you're then looking to take out these next string of highs back to the previous day to close the gap. So we go and look at this on a shorter time frame chart, and this really illustrates the positioning idea. You can make a pretty clear assumption that if the market has moved higher from yesterday's cash session, there are people positioned overnight long. So as these people get put under pressure, as we start to come back below that overnight low, which comes in at 86.87, that's where you can initiate the short. And in doing so, you're looking for it to break 63. Until you break 63, this market isn't breaking down, it is merely drifting lower, and it could well roll back on you. So this is where you have to think about your risk management. When you sell 87, at what point are you really right on this trade? And I often look at a trade and sort of ask myself, well, how far can I go on side and still be wrong? And with this trade, for me, until you get below 86.63, you're not right. And so therefore you could still be taking a loss. And you have to accept that when you take a trade on, that you could swing this 25 ticks on side and watch this come all the way back and still stop you out. When we look at the ladder though, this really helps you understand this isn't coming back. So that's what we're going to go and look at next. And we're looking at this move down here to a target down at 86.25 and then 86.06, a previous low, and area where we've got this sort of congestion of highs and lows. Here we go then. What we're looking at then is the beginning of the move. I've got a 1 minute chart on the left. I've got a footprint on the right with an 8 tick range on it. The level that you're interested in is 87. What I'm actually going to do, and I'd love to hear this in the comments, what people think about this, I'm actually going to show this at double speed. The reason for that, and I say this to so many people when I'm teaching them how to understand order flow, it's actually easier to watch markets moving faster because you get a real good sense of the sort of rotations of where you're bouncing between. When a market's moving very slowly, you don't actually notice where it's getting stuck and where it's sort of meeting highs and lows. So that's why we're going to show this faster. Like I say, let me know how you feel about this and whether you think this has been helpful. Here we go then. There's your quick little move. That bit of movement, that sudden change in pace and zip lower is the info that you need. That's the bit that says to you, yeah, this trade looks good. Now, as you're taking a trade on like this, you can start to position steadily for it. 87 was just broken very quick. And this is where you can get in, but you don't want to be in too much, simply because you've not got confirmation. We barely traded below 86 here. It drops down and bounces back quite quickly. But you can already have a stop on this. We've got a 10 tick stop. Why up at 96? That gets you back above these previous couple of lows just down here. It also gets you quite clearly back above the area where that acceleration came from on the footprint. So that's why you want to be getting short where we have got short. So here we go. We're trading down 83. We've had another go at trying to sell it. So we got an extra bit of position on. It was a bit of an aggressive sell and then exit of position. So sold, scratch, and then sold again. So we've now got two short. So we've got a bigger position, still same stops up at 93, 96 area. And this is now the case where you're looking at this going, right, I've had the information. I've had the information that I want to see. I got that drive down through 92. We've traded down to 100 lot and 72 lots, and we've got stuck, and now we've broken through those. So that was the reason to then add on once more. The next thing you're thinking about now is 63. That's the level that matters. Once 63 breaks, you can then be thinking, yeah, this move is on. We're going to get that bigger move that I'm looking for down towards the mid 20s, down towards 06. So here we go, we're starting to drift lower, but notice as we come down here, each time we drive lower, you're getting these little chunks of passive buyers. Now, passive buyers are fine. They're essentially getting in the way. And you see now we just zipped through 63. That was key. In that zipping through 63, you add on as it goes through. Quick add through 63, and we're now on to the next leg of the move. So you now can be feeling very, very confident in this trade. Hence the move in your stops down. Hence the adding on to the position. So it was sold again at 64. You're thinking to yourself now, market should stay below 64 really. 63, 64. You're helped in this because you've got this pocket of low volume. That little pocket of low volume coming in here, that's going to help you out with this situation. So that gives you confidence and also supports the stops being up at 71, 72. Notice as well, the stops being just below your average price is complete coincidence, not anything else. This is not a situation of trying to minimize risk and move your stop to a scratch. It's coincidence that it happens to be above that area of low volume. So now comes the phase that a lot of people don't like, and a lot of people get, I use the term bored out of trades with. So what happens here is the market drops and now it starts to stabilize, and this is necessary. Don't be put off by this. We're looking at the moment, the potential of a 70, 80 tick move. Don't be put off by the market stabilizing. It's taking a breather. It kind of needs to do this. You're helped out quite nicely here as well, that you've got this big passive buying down at 45. That helps you then go, okay, well, I can see the point where I'm going to get further confirmation on this break. If we break through 45, now it's looking good. If you wanted to add on further, you could do here. But this is where you have to now sort of say to yourself, now kind of trust the trade. You've done the hard work in planning the trade, in executing the trade, in adding on. Now it's a case of let the market go, let it pay you. You've done all of the work here. So you trade through 45, start to bounce back. And part of the reason for looking at this on double speed is that you now starting to see that these bounces are not quite so dramatic. We're struggling to get back above 46, and that's always a helpful thing there, not 46 specifically, but the fact that the bounces are getting increasingly tight, they're increasingly pressured onto the lows, and then you get the release, that sudden move down. This is what I'm always looking for. Whenever I'm in a position, short, long, whatever, if the market is creeping in my direction, there's no reason to be out. And incidentally, what you've got there is an attempt to sell for a second leg. Bit rushed, not a great trade. But one of the things I'm always thinking is if a market is inching lower, at some point this is going to put too much pressure on, and then it's going to have to release. Think of it like like an arm wrestle. That as somebody pushes and pushes and pushes, eventually it drops and it snaps down. It's that little snap that says go on, get out of the trade. I'm always looking for that. That's that kind of release of tension. As soon as you get that, you have to be quick. You have to have already planned for this. So when you see that snap, you go, right, that's it, get out of the trade. It doesn't go to 06. That doesn't matter, because the way it did it, it showed panic, and that says to you, time to get out. Exit the trade, get out of your position, job is done. Step back, wait, and then work out where you need to go from there. So there we have it. Oil breakdown using profile, using a double top, and using order flow for the execution of that one.